Yeah, basically this guy, it turns out he was like the fifth person ever on the Bitcoin network. Like when he joined on in whenever it was 2009, he started mining Bitcoin, and it was like Satoshi, Hal Finney or whatever. He was this English guy, mined about 8,000 Bitcoin, and then because his laptop was like causing too much noise, his girlfriend told him to turn it off. And then he forgot about it basically, and it turns out that his girlfriend like binned his hard drive. This is the days before hardware wallets and whatnot.
No.
And that Bitcoin is now worth I can't remember how much it said, but it's something ridiculous. I mean, what's 8,000 Bitcoin in the billions basically? Like, let me try and find out how much it was. Landfill Bitcoin.
It was at 8,000, is it?
But I watched this interview with him. Yeah, it's a billion pounds now.
Yeah, 800.
I watched his interview with him though, and he's a bit weird because he's obviously like he's never dropped this thing. He's tried to like sue the council to like get this, like he's tried to like get investors to buy this landfill site. And he's got a full team of like experts at like removing and sifting through huge piles of like forensic teams.
No way.
He's just never ever dropped it, and by watching this interview, he's never forgiven his girlfriend either for like throwing that thing out. But
is he still with her?
No, like you can tell he's like quite bitter. But one thing that this interviewer said, he was like, because the guy he forgot about it, he stopped mining and he threw the hard drive out, and he's like, forget it. And then he heard Bitcoin mentioned on some kind of BBC article or something like a few years later. He's like, oh, Bitcoin, is that still a thing? I'll check how much my coins would have been worth. And at that point, they would have been worth £1 million. So I think it must have been like £1,000 per coin. And the interviewer was like, oh, so you're telling me that would you have sold them when they were worth £1 million then? And he was like, no, I don't think I would. I was like, yes, you would. You definitely would. Stop lying. So he's there living in regret, like, oh, they're worth £1 billion now. But if he had that realization, he would.
But this is the thing as well, isn't it? It's like if you really understood what it was that you were doing, then you wouldn't just turn it off if your girlfriend tells you to turn it off. Like,
exactly.
There's he's probably coming across like he was a genius, and he saw it before. And if he did, he's had plenty of time to buy back in.
Exactly.
It's not like it's just magically gone up to over $100,000. It's been 16 years.
His latest scheme now is because I think he realizes that he's not getting the Bitcoin back.
But just buy more. Like when it was $1, $10, $100.
He's now this says it all really. He's tokenizing the 8,000 Bitcoin. He's started his own meme coin.
No.
I can't remember what it's called, but he was making out that it was like a layer 2 on the Bitcoin blockchain, because he's there like these 8,000 coins, or no, actually he said that because each Bitcoin is into 100 million. He said, I've got 8 billion of these shit coins. Can't remember what he was calling them. And they are 1-to-1 backed by this Bitcoin that's in the landfill. God. So he's tokenized this lost Bitcoin. I was thinking, not quite. They're not quite 1-to-1 backed, because you've lost that 8,000 Bitcoin. It's like, I can't just start a meme coin of Satoshi's coin. It's like, right, this is a 1-to-1 shit coin of Satoshi's coins. So, it's an interesting story to follow, but
that's mad.
Yeah. Even at one point, like Richard Hammond got involved, and
what, the Top Gear guy?
The Top Gear guy, and said,
why?
Well, he interviewed him for one of his shows, and Hammond went to the council and said, look, we want to do an Amazon TV show about this. We want to try and find these coins. It would be a great success story. And the council said no, and all this kind of stuff. It sounds like he had some real battles against the council. But it's one of those stories where I've seen it pop up over the years. Like, oh, this guy's still looking for his coins. Oh, they're worth 100 million now. And then a few years later, you're like, oh, they're worth 500 million now.
It's $1 billion now.
He's one that he's never gonna get over it, I don't think.
But why has he not just been buying more? Like, that's the bit that baffles me.
Another red flag.
He's known it all this time. Then
just... on his Twitter, he's an advocate of Bitcoin Cash as well, like the original. So you can tell he's not. He's not.
And there's the Bitcoin SV and all of that as well. You know, with what was his name? Craig Wright.
Yeah, that was just
who's Satoshi, and he sues everyone that says he's not.
Yeah, I was just listening about that whole story this week. Like, apparently that he started this lie that he was Satoshi in order to like get funding for something. Do you know about this?
Not really.
Apparently he basically like got caught in this lie because I have to rewatch this video, but he was trying to get funding for a project, and he basically bullshitted to somebody that, you know, he was the inventor of Bitcoin, and then it got to the point that he had to prove it, and it was like he was caught between these lies, like, can I prove it in court? And he was like desperately trying to prove it, because otherwise he'll get done for like fraud and lose his investment. And then basically the whole thing collapsed on him. It's like, you ain't, you know.
I don't get it. I've heard Jeff Booth say this numerous times over the years, and it's starting to make more and more sense. Is like, anyone that's tried to cheat Bitcoin, which are all of these instances that we've just spoke about here, they always lose. Like, the only thing you can do is just be honest, stick to it, buy it, stay humble, stack sats, all that. But yeah,
it's good advice.
Have you I know I've texted you a bit about like the whole this issue with core and knots and stuff going on in the minute. Have you dug into it like fully, or?
I have not. No. I know a bit about it, to do with like filtering or something.
Yeah. Like I just think it's all speculation. Like, you know, it's all like all the stuff that people are saying. You know, the issues that it could happen. It obviously hasn't happened yet, so it's kind of like, why would you worry about that? But it's the whole with like Bitcoin SV, how they did a very similar thing. So it's op return. You kind of got to get your head around what that is. I still don't fully understand it, but I'm going to figure it out in this week. It's my one thing to do. But basically that has gone. So knots only allows 40 bytes to go through. Core at the moment allows about 80 bytes. But Core's upgrade, which is about to happen next month in October, is going up to 100,000 bytes. And like, when I heard that, I was just like, that seems weird. That, you know, that's not a normal. You don't go from 80 to 100,000 like, on anything, you know, you don't change anything in Bitcoin that much. Like, what are you doing? It's very like, it straight away rang alarm bells of the whole, you know, Bitcoin Cash and block size wars and going from 1 megabyte to 8 megabytes and the issues with that, and it just causes centralization.
It was 1 to 8,000, wasn't it, with the block size wars?
Oh, was it 8,000?
I think it was 8,000 they were trying to push to.
Yeah, that is crazy.
Which is, yeah.
But it's similar, you know. That's similar. Then it's like thousands of times more than what it currently is.
So what's the reasoning behind what's Core's reasoning?
Their reasoning is something to do with, again, do you know much about like UTXOs?
Small bit.
Can you just like summarize what you know about that? Because I keep trying to say it and I'm doing it badly.
That a UTXO is basically a chunk or an individual transaction. It's an unspent transaction of Bitcoin. It's about as far as my knowledge goes.
Right. Yeah. And so, yeah, that makes sense. So what they're saying is they're trying to stop like these UTXOs clogging Bitcoin up. Okay. Basically, that's their excuse, is that by doing this, it allows miners. I don't really understand this part. I'm going to really need to dig into this properly this week. It allows miners to bypass, like, basically people can, my understanding is that you can easily not have this junk stored on Bitcoin by them increasing the size, basically. Like, as in, you could, I think it's basically, you could run partial nodes, is my understanding. But that really, to me, just seems crazy, because it's like, the whole point of Bitcoin is that so many people can run full nodes. So it's almost like they're encouraging people to bypass this junk that has been put onto Bitcoin by running partial nodes, or filtering these UTXOs and stuff that are just kind of sitting there. That's their reasoning anyway. But it just sounds really, really shady. Like the more that I've dug in, the more suspicious things that have been going on.
Right. Okay.
And like the big one that people are saying at the minute is then it's going to put like, you know, CSAM onto
the blockchain.
I don't want to say the words because it's like horrible, but like
CP.
Yeah, exactly. CP. It is possible that already exists on there, but the fact is because of these 40 bytes in the op returns, it's like that you'd have to put in dozens or thousands of blocks to make this one image, and then you'd have to like extract it all, and it's very technical. It's
but
like really
100,000 bytes. What is that? Is that 10 meg or is that 1 meg?
100 kilobytes. So what's
100
that?
kilobytes, right? So
1 meg is that?
It could be a JPEG.
Yeah, you could put an
so the issue
on,
is if,
or even potentially a small MP4. I've heard as well.
Right. So the issue is if there was a bad actor, they could put dodgy stuff on the blockchain. So every home node runner would unintentionally be downloading this potentially illegal content onto their home computer. So they're compromising themselves, basically.
Yeah, this is the bit that I've just been really figuring out. So I think this whole 40 bytes, this op return thing, that only goes onto the mempool. So it's not actually going directly onto Bitcoin yet. So that's just sort of the transactions that are sitting there waiting to be mined. And then the miners then have to mine it. And then once they are mined, then that's it. Every single node, whether you run Nostr or Core or whatever, every node will then have whatever it is that comes into it. So if there are any core nodes that are running this 100,000 bytes op return, then that means a whole image, like any whole image, could be just sitting there in the mempool. And then if a miner chooses to mine that, and there's so many shady things going on with Marathon at the minute that, you know, it seems like if they get paid whatever, then they're happy to do whatever, basically, is the bottom line. And then that's it. That is stored onto Bitcoin forever. Like every node will always have that on there, which basically means
it's tarnished.
Yeah, and I mean, legality wise, if you hold CP on your own computer at home,
could be a justification.
That's illegal and very frowned upon. It's not like you could see the image; you still have to actually do some like techie thing. But it's
legally, it could be a way to demonize and
you
make
can just see it. You can already see it, can't you, with the media? Illegal. Like if they if that narrative comes out, everyone that runs a Bitcoin node is all of a sudden
distributing stuff.
You know, like
very interesting.
That's the big thing. Whereas it's just like, why do it? Like, why do you need to do it? I think the thing that really interests me as well is that it's the whole. Again, I need to dig more into like Ocean, you know, with Ocean mining. So it seems like Ocean are already sorting this issue out of this UTXOs excess transaction and junk that can be stored. Like this is exactly what Ocean does. It allows individual miners, so you can join a pool, but you can then set your own criteria and filters and things. So that's what Ocean allows. So it's like you don't even need to do this. You just need to push Ocean. But then obviously you can just see where the financial incentives lie. You know, like probably Marathon, which is like one of the biggest ones at the minute, have the most financial incentives to give to people like Core, and I don't know where it's all coming from. That's the thing. It's like trying to figure out like who's actually trying to push this as an agenda. But yeah, I'm not gonna lie, it's definitely the thing that's been most concerning out of what I've seen.
I mean, probably the people that Bitcoin threatens most.
Yeah,
you know.
Yeah, exactly. I mean, you can just go down that whole conspiracy theory, but then you come across as crazy. And so it's like trying to actually get the facts to present, rather than just being like, oh, you know, the state is launching this CSAM attack on Bitcoin and is going to like destroy it, and this is how, you know, because that's at the minute
Yeah.
just speculation, and that's conspiracy theory.
Well, I mean, that's you say that, but that's a common tactic that is used. You know, if you wanted to destroy a politician or anybody, that's a common tactic that's been used before.
Yeah.
Put that material on them, and then they just completely destroy that person's character.
And it just then socially, like, you know, anyone that, especially for people that still don't really understand what Bitcoin is, like if it's got that sort of stigma around it, then they're gonna be like, nah, no, I'm out. I'm definitely out now. Like I thought it was weird before, thought it was a scam before, whereas now,
yeah,
you know. And so I don't really know what the answer is, but I think the point of like why everyone running knots is helping is it's just sending a direct message to them that we do not want this sort of thing. So the more people that can do that, the more percent that goes to knots, the more it is like an actual vote. And so this is why I think so many people have been like actively pushing people to run knots instead of core, basically.
Right.
I think that's where the bottom line is, really.
So this shows how much of a noob I am with that. What difference does it make? Like, let's say in a month's time, this update of Core, is it Core 20 comes out?
Core 30, yeah.
Core 30. And let's say like 50% of nodes are running knots, 50% are running Core. What difference does it make?
And that's what I've just figured out yesterday, is that it doesn't. And this is why it really got like a bit deflated about it, because I was like, what? Why is there not more people sharing this sort of thing if this actually is the case? Because like I say, the bottom line is once a node allows 100,000 bytes to come in on the op return and go into the mempool, and then once a miner mines that, and then that's it. It is on Bitcoin forever.
Okay.
Every node will always have that.
You only really need one node to run Bitcoin 30, or it only needs to happen once.
Yeah. Yeah. But it also then needs to be mined. So miners can choose to ignore it. Like, you know, they could, if they're actually filtering through the image or filtering through the transactions.
But you only need one miner to choose.
You only need one miner,
filter it,
and you only need one. Yeah.
Very interesting.
I don't know if it's, if you run, that's given me a question as well. If you run core or knots now, like, could you just change that filter yourself? I don't know. But this is the thing, like I say though, is like all of this sort of stuff might already be on there. It's just that it's so encrypted because it's split up over so many different things that it would be like impossible for anyone that's not super technical to actually get it. Whereas you still need to be technical to actually even get hold of this image, even with this whole 100,000 byte situation. But it's much easier, is my understanding of it.
Right. Okay. Interesting. Well, keep me updated.
Yeah.
That sounds crazy.
Yeah, that is all I'm going to be doing this next week. Right, should I share the screen?
Yeah, you share the screen. Well, I don't know if mine would work, but it hasn't been working. No, it's still not working. You go for it.
I think we're up to here, aren't we?
Monetary inflation, chapter 5. We're almost halfway through.
Cool. We can do this.
Shall I read?
Yeah, go for it.
Right then, so chapter 5 of the Bitcoin Standard. Monetary inflation. The simple reality demonstrated throughout history is that any person who finds a way to create the monetary medium will try to do it. The temptation to engage in this is too strong, but the creation of the monetary medium is not an activity that is productive to society, as any supply of money is sufficient for any economy of any size. The more that a monetary medium restrains this drive for its creation, the better it is as a medium of exchange and stable store of value. Unlike all other goods, money's functions as a medium of exchange, store of value, and unit of account are completely orthogonal to its quantity. What matters in money is its purchasing power, not its quantity, and as such, any quantity of money is enough to fulfill the monetary functions, as long as it is divisible and groupable enough to satisfy holders' transaction and storage needs. Any quantity of economic transactions could be supported by a money supply of any size as long as the units are divisible enough. A theoretically ideal money would be one whose supply is fixed, meaning nobody could produce more of it. Just on that point there, you could have a whole parallel society, like a whole commune, like a hippie commune, living off one Bitcoin. They would have 100 million units, and you could have like a field full of whatever, shops. You could have a little community living off one Bitcoin.
Yeah, and I think this is the massive thing that I still don't think enough people really understand about it, is that exactly what you just said, is that you only need a very small amount for a whole society to function if everyone agrees that that is money, because the price of it in terms of US dollars is irrelevant. And that is such a hard thing for us to get our head across, because that is all that we've ever used as money. It's US dollar, or some sort of fiat, whether it's pounds, sterling, whatever it is, whatever country you're in. And so, but that's the shift that we have to make for this to work. And I think this is kind of like the point that a lot of people make with what's his name? Well, Jack Dorsey, Jeff Booth, all of those sort of, the Bitcoin way, all of those people, that it needs to function as a medium of exchange, otherwise it just won't work. And it is already doing that. That's the thing. Again, because we're in our own bubble, we don't see it. We don't live in Madeira, we don't live in Costa Rica, we don't live in El Salvador, we don't live in South Africa, we don't live in these places where this is already happening. What you've just said there, that already exists in all of those places.
Argentina is another one I was reading about.
There's more and more popping up. There's more citadels and stuff. There's one in Europe somewhere. Where was that? It's like off Italy somewhere. Well, I was seeing.
I think it'll probably come just out of sheer desperation, like as our Western currencies continue to just be inflated away. I think more and more people will have to, jump
people
ship.
Just can't see it. They're literally the frog in the water that is slowly being boiled, and they can't feel it. They're slowly getting boiled. But,
maybe in like 5 years, 10 years, it'll be a little bit more obvious.
Yeah,
you're like, hang on, why are you staying afloat? Oh, you've been buying Bitcoin for 10 years, and do you know what I mean? Because those groceries are not going to be deflating anytime soon.
And I do think it's going to be slowly then suddenly. It will be,
right.
It's already been slowly, and it has been suddenly in certain places, like Lebanon, for example, or, anywhere with hyperinflation. So that's already happened. Suddenly has already happened in certain places. Whereas I think exactly like you say, there will be a suddenly moment. I don't know what it will be. I don't know why it will be. But when you combine things like the rise of AI and that taking people's jobs, the rise of unemployment, people then having to rely on governments and things like that for their income, then that's probably going to be the stage where it will be suddenly, because it won't just be like, I think a lot of people sort of think when that unemployment spiral kind of happens, they sort of think they're going to have time to then figure out something else or find another job or whatever, but it doesn't really work like that. If you look through every time that there's been a crash ever, it is suddenly. And 20% plus of the population all of a sudden has no income. And so what are you going to do?
You're going to jump on the CBDC shitcoin.
Exactly.
That you need 10 injections to have the first payment.
Again, yeah, exactly. I don't like going down the whole conspiracy route, because I know it can turn so many. I do in my own head, but not out loud, because I know that so many people are like, "Oh, you're crazy" and stuff. But it's trying to present facts to let them come to their own conclusion or whatever. But I 100% can see this happening much sooner than 5-10 years. Like I hope it doesn't, but it's like, even just with what they're doing, I've got my head around a little bit with interest rates, what the Fed is doing, things like quantitative easing, just sort of cycle liquidity. I've been learning so much about that in the last few years, and I can see it's all coming to a peak now because of all of this debt that was taken on in like 2020, because interest rates went down to zero. They're all expiring in 25, 6, 7, 8, like all of this debt, like a huge amount of debt. And so that means it needs to be refinanced, basically.
Or they default on it, is that right?
Exactly. And as soon as that default happens, as soon as that first one happens,
it's like a chain reaction, isn't it?
Exactly, because there is no liquidity. There's no one. It means that one place defaults, so they take their money out of whatever they can, whether it's stocks, property, Bitcoin, whatever it is. They will take their money out of anything that they can to then pay off their debts.
And when you say they, do you mean the governments that are borrowed from the banks, or the banks, or it doesn't just companies?
It could be anyone, individuals, companies, it's everyone. It's literally, and it will be all at the same time, sort of thing. And I think that's the thing where we can't see it because it doesn't exist right now, sort of thing. And I've looked so much into the 2008 one. Just things like The Big Short is just a great way to get a beginner's idea on it, but you have to watch that like 3 or 4 times to even really, I did anyway, to really understand it. I actually watched it again the other day, and that is literally what happens. It all looks rosy, everything's all great, and it's like you can already see it's happening. Have you seen like the jobs revision data of the last few months?
No.
It's been insane.
I'm glad you're doing this research so I don't have to.
It's insane. It's literally like, I've never seen anything. I've asked AI and dug in so much on this. It's like, has this ever happened before? But it's gone from something like, they were saying new jobs coming out over, was it May and July? It was some months recently anyway. The numbers were something like 188 million jobs, or what is it? Maybe not million, maybe 188,000 jobs or something. But the number's not so important. The fact is, it's gone from like around 200 whatever thousand down to 19. They've revised how many jobs have been coming out. So the data that the Fed has been using has been going off, oh, we've got all of this new jobs, so we don't need to cut interest rates. Nothing's broken. Everything's working great. So we can keep everything as it is now. And then it's been revised. I don't understand how they can just revise it. Like, what do you mean it's been revised? Why is no one checking this before they release these numbers? It's like, what's changed since then? And it's like 10% of what they've said, the amount of jobs being created. It's not even close. It's not like it's gone from 200 down to 150, or it was 200 down to off. 20 or less, 14. Whilst you're talking, I'll find this data so people can actually see it, because it's ridiculous.
It sounds,
I just can't believe it.
Right then, I'll crack on while you find. Oh, where's that gone?
How did that happen? Sorry. There we go.
Can you still search on an alternate screen? Is that?
Yeah, I should be all right.
That works. Cool. So a theoretically ideal money would be one whose supply is fixed, meaning nobody could produce more of it. The only non-criminal way to acquire money in such a society would be to produce something of value to others and exchange it with them for money. As everyone seeks to acquire more money, everyone works more and produces more, leading to improving material well-being for everyone, which in turn allows people to accumulate more capital and increase their productivity. Such a money would also work perfectly well as a store of value by preventing others from increasing the money supply. The wealth stored into it would not depreciate over time, incentivizing people to save and allowing them to think more of the future. With growing wealth and productivity and an increased ability to focus on the future, people begin to reduce their time preference and can focus on improving non-material aspects of their life, including spiritual, social, and cultural endeavors. That to me just sounds like a free market. And as Jeff Booth says, a free market is naturally deflationary. I was watching one of his podcasts the other day, and I was thinking a perfect drinking game would be watch a Jeff Booth podcast. Every time he says free market is naturally deflationary, take a shot.
Or as long as Bitcoin stays decentralized and secure.
And secure, exactly, yeah, take a shot.
Yeah, that would
it had, however, proved impossible to come up with a form of money of which more cannot be created. Whatever gets chosen as a medium of exchange will appreciate in value and lead to more people trying to produce more of it. The best form of money in history was the one that could cause... go back a little bit. That would cause the new supply of money to be the least significant compared to the existing stockpiles, and thus make its creation not a good source of profit. Seeing as gold is indestructible, it is the one metal whose stockpiles have only been growing since the first human mined it. Seeing as this mining has been going on for thousands of years, and alchemy has yet to prove large-scale commercial viability, new mining supply continues to be a reliably tiny fraction of existing stockpiles. This property is why gold has been synonymous with sound money. It is money whose supply is guaranteed, thanks to the ironclad rules of physics and chemistry, to never be significantly increased. That's an interesting point, actually, that the gold supply is guaranteed thanks to the ironclad rules of physics and chemistry to never be significantly increased. Whereas Bitcoin's is almost, it's like, thanks to the ironclad rules of maths and cryptography, you know.
Yeah.
Try as they might, humans have for centuries failed to produce a form of money more sound than gold, and that is why it has been the prime monetary instrument used by most human civilizations throughout history. Even as the world has transitioned to government money as a store of value, medium of exchange, and unit of account, governments themselves continue to hold a significant percentage of their reserves in gold, constituting a significant percentage of total gold supply. Keynes complained about gold mining being a wasteful activity that consumed a lot of resources while adding nothing to real wealth. While his same as people moaning about Bitcoin mining. While his critique does contain a kernel of truth in the sense that increasing the supply of the monetary medium does not increase the wealth of the society using it, he misses the point that gold's monetary role is a result of it being the metal likely to attract the least human and capital resources toward its mining and prospecting compared to all others. Because the supply of gold can only be increased by very small quantities, even with price spikes, and as gold is very rare and difficult to find, mining monetary gold would be less profitable than mining any other metal assuming a monetary role, leading to the least amount of human time and resources going into mining it. Were any other metal used as the monetary medium, whenever society's time preference drops and more people purchase the metal for savings, raising the price, there would be a significant opportunity for profit in producing more of the metal. Because the metal is perishable, the new production will always be far larger relative to gold as a percentage of existing stockpiles, as in the copper example above, bringing the price down and devaluing the savings of the holders. In such a society, savings would be effectively stolen from savers to reward people who engage in mining metals at quantities far beyond their economic use. Little saving and useful production would take place in such a society. Impoverishment would ensue from the obsession with producing monetary media, and the society would be ripe for being overtaken and conquered by more productive societies whose individuals have better things to do than produce more monetary media. Was it you telling me, or maybe it was in this book or a book, that somebody tried to put like billions into mining copper or holding copper because they thought it would be like a good store of value, but then they just mined so much that it crashed the value of it?
Yeah, it was. Yeah, I definitely know that story as well. Yeah, maybe it is from this. Yeah, I think it is in this book. It's in one of the previous chapters. It was like one of the biggest like misplacements of, or one of the poorest investments ever, sort of thing.
Yeah, the guy was like, "Well, I'm just going to have loads of copper. I'm going to
and he didn't understand how free markets work.
Exactly. In reality, it was like, I've just flooded the market and made everything worthless.
Yeah, it just incentivized the miners to get more copper. basically. So the price hardly changed because they could just, there was an abundance of copper that they could just like extract, and then because he was buying it all up, they could sell it for more, and it just sort of.
Well, this is
like
why
a gold rush, same sort of thing.
This is why the difficulty adjustment on Bitcoin is so genius, I think, because it's almost like it reacts. The more you push, the more it pushes back at you. And then the more you resist, the more it resist. You know what I mean? Like it tries to maintain equilibrium at all times.
Everyone understands basic supply and demand, but everyone seems to just lose the plot here with Bitcoin because it's Bitcoin. It's just digital, like whatever, they have their own agenda, and they can't see real basic supply and demand. And it's like, just I've even with friends, I'm like, look at this. I'll show them a chart of the hash rate. And I was like, what does this show you? Like what? It's literally just going up like this, the hash rate, all the time. There's 70% drawdown. It's still going like this. Does that suggest to you that there is a shrinking demand for this or not? This is people that are investing money into creating more and more computers that are going to guess the secret, the key code for the next 10 minutes. This is happening more and more and more over the last 16 years. That's just basic demand. It just shows. But the same with like total number of users and stuff. You can show like how many that is and stuff. It kind of has flattened a little bit, to be fair, since 2017, to be fair about that. But still, it's up and to the right, all of these charts. So that just shows demand's going up. And then look at the supply. What's happening every 4 years? It's programmed in every 4 years. The supply is cut in half. It's showing declining supply. So you've got declining supply and increasing demand. I've tried to explain this to people before, and they're still just like, yeah, but what happens if blah 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 blah? And there's always a yeah, but, and there's always another thing. So I don't know. It's I just think it's simpler than that sometimes.
And I guess it's the first thing in history ever to have that model locked in place.
Everything doubles in supply. Everything. Whereas Bitcoin will never double in supply again. Not even close to double.
I'll crack on. The reality of monetary competition constantly has... Oh, did you find that chart, by the way? What were you...
Yeah, should I show you that now?
Yeah, pull it up.
So what do I need to go to? Let's just do this entire screen. That'll be easier, I think. So, yeah, can you see this? Basically, like this is not, this is not from some crypto bro or anything like that. This is, and you can find the same thing. Added 258,000 fewer jobs. So the US only added 19,000 jobs in May compared to the initial report of 144,000, and then 14,000 in June from 147,000. Like, do you see what I mean? Like that's not a little decline. There's not a little revision. Like there's no way that anyone can just be. There's no way someone could have thought, oh yeah, we've had 144,000 jobs, and then oh no, it's 10%.
It was actually 14,000.
That's not a mistake. That I, again, without going down the whole conspiracy thing, but like that's just fact. Like, how is that possible? So during this time, the Fed hasn't been cutting rates or easing anything because they're going off this data. So everything looks rosy. Right. And so this is what's happened recently. Then the last thing that Powell spoke about is the September rate cuts. He's kind of seems more like, oh yeah, we're going to have to cut rates and stuff because of these revisions and numerous other reasons. I mean,
now when you say cut rates, do you mean that the Fed will cut the interest rates that the US government has to pay back on their loans?
Well, yes, that will be the impact. So yeah, that was the other one. So combine that with this,
because at the minute the interest that on the loans that the US has to pay to the Fed, right, which is a completely separate private entity, is just draining all of their resources. Is that the issue?
Yeah. So when
they're
the
basically
Fed,
bankrupt.
Yeah.
Everywhere.
Every country's bankrupt.
Yeah, literally.
It's but because they just keep creating more and more money, that's how they can stay afloat, sort of thing. And as soon as they stop, so this is why they teach everyone with Keynesian economics that inflation is good and is healthy, and it gives us the control, so we can make sure that these financial crises don't happen. And it's like, so how did 2008 happen then? And all the other times that it has happened in the last 100 years. But when you combine that with this, so this is the debt that's rolling over. So you can see as well, I don't know if you ever looked at Raoul Powell always talks about business cycles and liquidity cycles. This guy here, Michael Howell, he is like the liquidity guy. So I've watched a few of his stuff in the last few years, but you can see like how much debt is about to expire because interest rates around this time were so low. So it meant that people took out tons and tons in 2020, 21, 22. They took on loads of debt, loads of loans, because it was so low. Like interest rates were literally zero, which is like never been before, sort of thing.
Yeah, free money almost.
Exactly. So then they've raised it sort of slowly but suddenly over time up until like 5%, and now it's around 5% at the minute. And you can see like this is how much. So that's $2 trillion in debt that needs to be rolled over. So in the last 2 years, so last year and this year, that's like about 5 trillion. The next year there's another 3, that's 8 plus 4, 16, 20. That's like 20 odd trillion in just the next few years that needs to be rolled over, and it's gone from a 0% interest rate to 5%, which basically just means that payments are going to go crazy, and people are not going to offer people this. They're gonna restrict like who can take the refinance, or they're just going to have to default because they won't be able to pay the interest on it. And that's what I mean about how they're then going to have to sell assets or sell whatever they can to pay their interest. Like before they default. And then once one or two people start doing this, the price of things start going down, which means that people have even less capital that they can get hold of, and it's just a snowball. And so
wasn't there a thing a few weeks ago where it said like BlackRock is buying up loads of like federal land, loads of like government land? That to me already seems like a bit of an asset seizure.
No way.
Do you not read about that?
I haven't seen that. No.
I mean, to me, it seems like if you've got a loan, if you take out a bank loan and you can't pay, and you default, the bank will come and take your stuff, come and take your possessions, right? All this is just that on a macro scale. Like, you've got an entire government now, an entire country that has a private bank loan to a group of private people. They're defaulting, they can't pay. So now these private bankers is going to come and take all of our shit. Well, it's not it's the entire country on a country scale. Do you know what I mean? On a macro scale.
Yeah.
These bankers have pulled off the biggest swindle by not just making an individual on a micro scale default and coming and taking their possessions. They're pulling that off on a macro scale, on a countrywide scale.
Bad, isn't it? So what? That's BlackRock taking on
federal land. Yeah, I read something about that. They were taking on like mad amount of acres in America. Shall I continue with the read, and you find that, because that was a bit. I remember it was a bit of a scandal a few weeks ago.
Sure.
Where was I?
So they've basically defaulted, have they?
Well, I mean, what happens if a country defaults? Does the IMF come in, and which is another? IMF comes in and says, "Don't worry, we'll save you. We'll give you another loan." You know, it's like sooner or later, there's just nothing left.
Yeah.
Or or you have certain leaders, like, for example, JFK, say, you know what, F you, F these bankers. I'm just gonna create my own currency, which was the greenback. But then obviously he unfortunately got killed. Nothing to do with that, I'm sure.
Conspiracy theories run deep.
Well, there we go. Didn't make any claims there, so just things that make you go, you know. I mean, yeah, every leader that tries to create their own currency away from the central bank gets offed in some way. I'm sure, like Gaddafi was one. Who else? I mentioned Saddam Hussein tried to move away from the petrodollar, and then 2 years later got killed. Loads of stuff like that. But anyway,
yeah, I can't find anything on BlackRock. Maybe
it might not have been BlackRock. It might have been just put like 8 loads of federal land being sold off in America, something like that.
Yeah.
Anything coming up?
So there's Nevada land sales ongoing. The BLM conducts it. I'll just show you what's coming up. You see that? Can you see that?
Yeah, this might be it, yeah. Sale of thousands of acres of federal public land. Proposed legislation requiring the sale of 2 to 3 million acres of federal land. Up to...
Yeah.
It may not have gone through after all.
So that's in June 2025. They've been withdrawn due to opposition.
That's fair enough. Yeah, it's one of those things though, like what does happen if a country defaults on its loans? Like, is the bank just going to be like, don't worry about that.
Too big to fail.
Don't worry about it. Don't worry about it. You know, we'll let you off.
I think it just has to be mass money printing, and I think that's exactly the big print. You read Larry Lepard's book, haven't you? So I think this is exactly what he's talking about.
Keep printing and keep printing,
but it will be but eventually, big print, like as in people know that there was a print in COVID. Well, a lot of people don't know this actually. They just think they were given money magically, and that's great and all dandy. People don't ask questions if they're given money, sort of thing. So that's literally what happened during COVID, which is just bananas. But yeah, I mean, what was it? It's like 40% of all money has happened since COVID.
Yeah.
So
the chart's just gone like vertical.
And again, that doesn't sound that bad, especially when you come from like crypto land where you're used to like 10x's or whatever. But 40% of all the money has been printed since 2020. And that was actually done within the space of about 2 years. They've actually been declining. It's been declining. Like they've been trying to get rid of some of this since that, and now it's starting to like have the uptick again. But it's that's just that, in like, what is it, 200 years of the US dollar, 40% has been created in 2 years.
In the last 5 years, yeah. Poof. Anyway, I'll crack on. The reality of monetary competition constantly has disadvantaged individuals and societies that invest their savings in metals other than gold while rewarding those who invest their savings in gold, because it cannot be inflated easily and because it forces people to direct their energies away from producing a monetary good and toward producing more useful goods and services. This helps explain why Arab polymath Ibn Khaldun referred to gold prospecting and mining as the least respectable of professions after kidnapping for ransom. The folly of Keynes condemning gold as money because its mining is wasteful is that it is the least wasteful of all potential metals to use as money. But the folly is doubly compounded by Keynes's solution to this shortcoming of gold, being to propose a fiat monetary standard which has ended up dedicating far more human time, labour and resources towards the management of the issuance of the money supply and the profiting from it. Never in the history of gold as a monetary medium did it employ as many miners and workers as today's central banks and all the associated banks and businesses profiting from having close access to the monetary printing presses, as will be discussed in Chapter 7. When new supply is insignificant compared to existing supply, the market value of a form of money is determined through people's willingness to hold money and their desire to spend it. Such factors will vary significantly with time for each individual, as individuals' personal circumstances go from periods where they prioritize holding a lot of money to periods of holding less. But in the aggregate, they will vary slightly for society as a whole, because money is the market good with the least diminishing marginal utility. One of the fundamental laws of economics is the law of diminishing marginal utility, which means that acquiring more of any good reduces the marginal utility of each extra unit. Money, which is held not for its own sake, but for the sake of being exchanged with other goods, will have its utility diminish slower than any other good because it can always be exchanged for any other good. As an individual's holdings of houses, cars, TVs, apples, or diamonds increases, the marginal valuation they put on each extra unit decreases, leading to a decreasing desire to accumulate more of each. But more money is not like any of these goods, because as more of it is held, the holder can simply exchange the money for more of the next good they value the most. The marginal utility of money does in fact decline, as evidenced by the fact that an extra dollar of income means a lot more to a person whose daily income is $1 than one whose daily income is $1,000. But money's marginal utility declines far slower than any other good because it declines along with the utility of wanting any good, not one particular good. That makes sense, I think. The slowly declining marginal utility of holding money means demand for money at the margin will not vary significantly. Combining this with an almost constant supply results in a relatively stable market value for money in terms of goods and services. This means money is unlikely to appreciate or depreciate significantly, making it a lousy long-term investment but a good store of value. An investment would be expected to have a significant appreciation potential, but also carry a significant risk or loss of depreciation. Investment is a reward for taking risk, but sound money, having the least risk, offers no reward. In the aggregate, demand for money will likely vary only with variance in time preference. As people develop a lower time preference overall, more people are likely to want to hold money, causing a rise in its market value compared to other goods and services, further rewarding its holders. A society that develops a higher time preference, on the other hand, would tend to decrease its holdings of money, slightly dropping its market value at the margin. In either case, holding money would remain the least risky and rewarding asset overall, and that in essence is the root cause for demand for it. This analysis helps explain the remarkable ability of gold to hold its value over years, decades, and centuries. Observing prices of agricultural commodities in the Roman Empire in terms of grams of gold shows they bear remarkable similarity to prices today. Examining Diocletian's edict of prices from 301 AD and converting gold prices to their modern-day US dollar equivalent, we find that a pound of beef cost around $4.50, while a pint of beer cost around $2. A pint of wine around $13 for high-quality wine and $9 for lower quality, and a pint of olive oil cost around $20. Comparisons of various data for salaries of certain professions shows similar patterns, but these individual data points, while indicative, cannot be taken as the definitive settlement of the question. Roy Jastram has produced a systematic study of the purchasing power of gold over the longest consistent data sets available, observing English data from 1560 to 1976. to analyze the change in gold's purchasing power in terms of commodities, Jastrom finds gold dropping in purchasing power during the first 140 years, but then remaining relatively stable from 1700 to 1914, when Britain went off the gold standard. For more than 2 centuries, during which Britain primarily used gold as money, its purchasing power remained relatively constant, as did the price of wholesale commodities. After Britain effectively went off the gold standard in the wake of World War I, the purchasing power of gold increased, as did the index of wholesale prices. I remember reading somewhere that to get a suit tailored nowadays is around the price of a gold coin, and 500 years ago it was around the price of a gold coin. So it's like that gold does stay pretty constant with those commodities, as they say.
Yeah.
Whereas, fiat's just doing its own crazy little thing.
I mean, just look at that. I know some people are not really like charts people, but I don't know how you can look at that and not see the craziness of wholesale commodity index. It's gone.
Yeah.
So it's literally 1913. Boom.
I wonder if it will click with people, say like the average Joe, because at my work, I've said this before, but people talk about this all the time, but they don't realize they're talking about, they don't understand the foundational problem.
Mm-hmm.
But they may use the word inflation, maybe, but they talk about prices are going up. Why are prices going up? It's almost like they don't get it, they don't understand it, but they know there's a huge issue, and it's what every average Joe is talking about. At my lunch hour at work, where all the staff sit around and just eat lunch, that's what people talk about almost every single day.
No way.
They're like,
how do you bite your tongue and or do you? What do you say? I just don't think I could do it anymore. I'm terrible. My wife gets drive my wife bananas.
I've tried to explain it to some people before, right, and go into money creation, fiat, that kind of thing, why inflation is the thing. And I've tried to even explain the prices are going up, right? It's not because the price isn't going up as much. You see the number go up of eggs, for example, but it's not the price of the eggs going up. It's the value of your pound going down. So you see your purchasing power go down is reflected in the price of the groceries going up. But even when I get to that point, they start glazing over. No, seriously, they start. I see this stare, this kind of like they zone out, and I've lost them. Even with that basic concept, I can't go any further. And there's even people at my work who, if it's almost like an in joke now, where people are just stubbornly, I'm the Bitcoin guy, so it's like, oh, yeah, it's a scam. I don't bother. Exactly. I literally, I've tried, and I just don't bother, because they'll be thinking, who is this guy? He's got the same job as us. Is he some kind of economic, expert? Which is a fair enough. Like, it's like, if you're an economic expert, why are you not driving a Lamborghini round? Why have you got the same job as us? Yeah. Which is completely fair point. Yeah. But I've tried, and now I've almost just given up because it's just not worth it.
Yeah, I've came to that realization recently. Actually, a lot of like my close friends who I've really, because it's kind of got to the stage now where I would feel bad if I haven't at least tried. Especially with like loved ones, close people to you, and so. But I think a lot of them I knew from like uni days, and I was totally different to who I am now, sort of thing. Mm-hmm. And so they just see me as, it's Mike, who's like, why would we believe him? Like, what, exactly like what you're saying as well. He's one of our peers. He's not got any special wisdom or knowledge about this or anything like that. But even then, if they heard it from a financial advisor or something like that, I still wouldn't still wouldn't take it in. It still wouldn't, because I think it has to come from something internal in you. You can't just be like force fed this stuff and it happen. So it is really hard though, isn't it?
Yeah, it's one of those. Yeah, who knows?
That's
maybe some people just like moaning about things, but they're not actually looking for a solution.
Yes.
Yeah, so
I've learned this from my wife. she's actually said this to me before as well.
Right, I thought you meant your wife was like that.
No, she said that. Well, like, she'll come home and have a moan about something.
Yeah,
and then I'll suggest a solution, or like, how she gets. And she's like, you don't have to fix everything, Like sometimes you can just be there and just listen to me and just support me, and like you don't always have to try and fix everything.
To be fair, I think I'm a bit like that with some things as well. It's like, well, I moan about something, and it's like, well, why don't you do this? It's like, well, I can't bother. So I'm guilty of it as well, definitely.
Yeah, well, everyone needs to vent, don't they? So I get it, but yeah, it's but yeah, I mean, that was a big reason why I was like, I'm just going to start the YouTube channel, because at least then you can spend time and actually like figure out what it is that you want to say. Whereas like when I say things on the fly to people, it comes across badly, or I end up putting people down like without meaning to. It's like, I'm not trying to do that. It's like, I'm in the same position as well. It's me that has been doing this as well. Like it's not like I'm superior or anything like that. Like you're just trying to say it in a way that people can understand and come to realize they have to come to it themselves.
It's hard though as well, because I've got I mean, my workmates, they're just kind of like my workmates, but I've got close friends, as you were saying, who are also in this like financial, also feeling the pressure. And I almost want to have like a sit down with them and like, just give me 1 hour, because I need you to start putting just £5 a week, something into Bitcoin, and start understanding this a little bit more, because I care about you, So, I mean, who knows? But again, as you say, it needs to come from them. They can't just be like, oh well, I'm doing it for him. You need to do it for yourself, I guess. It needs to click in your own head before you start being invested in it.
And that's the other thing as well, is that because there will be another time where it goes down 50, 60, 70, whatever percent, that will happen again, without a doubt. It's not at that stage yet where it's globally adopted and everyone understands it. So it's 100% going to happen. And then when that does happen, if you do have any doubts, if you don't have the conviction, if it's not internally understood, then you're just going to sell. And so you're just going to lose the money, because they're going to put it in now. It's going to go down, and then they'll sell. It might not even be that much. It might just be a quick 30% flush, which has happened repeatedly over the last 4 years as it's been climbing back up. So even though it's gone from 15k to 115k, within that there's been 30% drawdowns for months sometimes, where people could 100% have just panicked and sold.
Should we call it a day there? We've done an hour.
Yeah.
We'll stop at the graph. Do you want to give your channel a shout out?
Bitcoin straight up. That's it.
There we go.
How's it? Tell us about the chart. What's that? 1, 2, 3, 4, 5, 8. Is that 8 now?
There's been an update, but I'm still working on editing the video. This has gone up by 2.5 million sats recently.
Whoa, millionaire.
There was a big update, but I'm working on the video still. Hopefully it'll be out by the time this comes out.
I know what it's about.
Yeah, but basically I've been frustrated with the video edit, because I'm watching it myself back. I'm thinking, this is so blooming boring. I'm just sat
times
there.
I've done that.
Yeah, and I'm just thinking, this nobody's going to care about. But I have to like explain the context. Basically, I had like a side business that wasn't doing very well. Started it years ago, got rid of it all. But I had to like explain what the business was, why it wasn't working, and then compare like a typical project within that business versus Bitcoin and all that kind of. I'm watching it back and thinking I'm bored to tears here. So I'm not sure. With the edit, I'm thinking it's taking a while. Let's put it that way.
Yeah, no, I definitely know exactly what you mean. I've actually, in my first, because I just planned to do 10. And I didn't even know what was going to come from it, or if anything. But I just knew I needed to do it to explain to like close friends and people like that. Because I feel like if I spent the time to put it together well, then maybe that could help people see it. Maybe not, I don't know. But like in those 10 videos, I completely scrapped 2 and had to redo them from scratch because I was just like, this is crap.
Yeah. Sometimes you gotta do it because
it ended up going off on a tangent, and I was like, and there was no way I tried like patching bits, and I was like, no, I'm just gonna redo it all from the start.
Yeah, sometimes it's got to be done. So who knows when that's going to be out? I need to potentially redo it. But for now, we'll call it a day. See you next time.
See ya.
Peace out.